employment status can affect your mortgage loan application in a couple of different ways. We are looking for if you the client are considered part-time or full-time employment. Part-time employment has different guidelines than say somebody who's full-time employed. We are also going to be looking for, is it a seasonal employment application, seasonal employment job, or is it regular, steady, stable and income that's going to continue? Oftentimes we do see some families that work in union states. So they may have, their full-time job, but during the winter, especially up north, if we're, dealing with some snowbirds or something here in Florida, that, they work full-time for 10 months of the year. And then the other couple months they are on unemployment income because of that's just the way that their union job works. That income would be considered acceptable as long as we had a 2-year history of such employment. We're just really looking for if income is steady, stable, and increasing, and the likelihood of its continuance. So secondary market guidelines state that income or employment has to be verified at least 10 days prior to closing. It's done usually when we're sending the file back for what we consider or call our clear to close, because as soon as the underwriter reviews all of the conditions on the file and is able to sign off on everything and issue the clear to close, if we don't have that verbal verification of employment in the file, they can't push the file right over to the closing department. Now, in a perfect world, that's all done, 10, 8, 7, 6, 5, days prior to closing. But in a 30-day contract, we have, on average 21 people that touch a loan file from the beginning till the end. So sometimes the client's verification of employment or verbal verification of final employment's not actually done until the day of or the day before closing. So you really need to stay, actively on your job and in good standing all the way through the loan process. Well, if you get promoted within the same company, great, take the promotion and keep going. It is a promotion. We can verify with the Human Resources Department that the terms of the new employment, and as long as we're being able to show that the income is steady, stable, and increasing, which in a promotion case it is, then we're good to move forward. If you find a higher paying job, there's a couple different things to look at here. So a lot of times employment contracts have contingencies in them, like maybe a drug screening or a background screening, or you don't get an offer letter and start the next day. I wish that happened in some cases, but most of the time the hiring process for a new job is at least a couple weeks at best to get through all of those contingencies. And then in starting a new job, so in the underwriting process, we're going to require a copy of the contract to make sure all the employment contract to make sure all the contingencies are met. And then we are going to require 30 days of pay stubs prior to closing. So if it takes 2 weeks to start the job and then 30 days for paycheck stubs, and then maybe it's a biweekly pay, so you don't really get your first paycheck for a month, it really could potentially delay your closing for about 45 to 60 days. Another thing to take into consideration, there are loan programs out there such as FHA that have their own sets of guidelines. One being, and I'm actually unfortunately dealing with this right now with a client, she's a cancer survivor and had a gap of employment a couple years ago for about 6 months while she went through her chemo and radiation treatment. She's been back employed for 19 months, but for 13 of the months she worked at one job and then she switched her employment to another. Well, FHA requires that you have 6 months on your current job if you had a gap in employment in the last 2 years. So even though she's been consecutively employed for the last 19 months, I can't close her loan until she's been on her current job for 6 months. And investor guidelines and the government agency guidelines are their guidelines, and we have to adhere and underwrite to them. So unfortunately, it's delayed her closing a little bit, but I'm happy to announce we will be closing in the next couple weeks. So we made it through it. As lenders, we always want to make sure that your loan can perform. We never want to put somebody into a home that they may not be able to afford. We are not going to verify your employment whatsoever after closing. I mean, once we close, I mean, it's your life, and we can't predict the future. And the secondary market investors, could never come back if you were to change jobs or quit your job after closing. I just, always caution people to make sure they're making the right decisions. You are making a 30-year, 15-year, 25-year investment, and it's one of the biggest investments you'll ever make. So just always make sure you're setting yourself and your family up for success when you're making big decisions like that. Again, this is Kristin Jamieson with Success Mortgage Partners. We understand the mortgage loan process can be stressful and have a lot of and it has a lot of moving parts throughout the whole process. If you ever have any questions on the mortgage loan process or qualifications on obtaining a mortgage loan, please don't hesitate to reach out to myself or my team at 352-242-1535. Thanks.